So what I want to do today is talk to you about the practical and the legal and the financial requirements that both being a freelancer require you to do, but also just in life in general. So I'm going to look at the short term and the long term and actions for here and now and some thinking for tomorrow, and then the longer term thinking. So what we like to call the longer term thinking, what we like to call a pension. I'm going to try not to send you to sleep, because I know the word pension does often do that to people, but it's such a vital thing to try and engage with. So to kick that off, I want to get you all to think about your life plan. Now, I'm going to get very basic. I've been so impressed with the tech stuff today. It's phenomenal. From an outsider's perspective, looking at all this tech and listening to all the tech that goes on, but I'm quite DIY and basic with my tech, as you'll see in my slides now. But I can sort of picture you sitting at your desks, and if you have a pen and paper, can you please just write this life plan out on the vertical, career, family, property, lifestyle. Now, these cover some really important areas in your life. They might not cover them all, but hopefully will do a good job. And then we've got the time scales along the bottom, 0 to 5, 5 to 10, 10 to 15. And if we can look through and start putting in things for your particular life. Now, one of the key things, actually, I didn't say up front, is that what I say here isn't advice per se, because I don't know you all individually and I can't give you all advice, which is what the phone calls are about later if you need to talk to me. But this is just guidance notes, so it's just an important caveat to put in there. But anyway, with your life plan, you've all got these individual goals and views. You might not put them out on paper very often, but it's a really, really key thing to do, front and center of any financial planning, is to get those goals out there. And then, once they're all out there, what I want you to do is circle anything that might need money. If you circle anything that needs money, you will probably see that everything will end up being circled. And before I go on to that, so I'm jumping about a bit. There are all of these calls on money in your life and in your future life. And it's not an area we talk about enough in this country, particularly, and it's a really key thing to start thinking about and start talking about. But really, there are 3 ways to make money. You earn it, which is what you're all doing now. You potentially you can invest in things like ISAs and pensions, which I'll come on to in a second. You can also invest in your own company, which really is what being a freelancer, a sole trader, is all about. So before I go on to my second point, I just want some terminologies that I want to make sure are really clear in your mind. PAYE, some of you will be PAYE, pay as you earn. This is really meaning that you are employed, and that's what HMRC see you as an employed individual. Now, if you choose to go freelance, we can also use the term self-employed, we can also use the term sole trader. All of them mean that you work for yourself, and as David was saying earlier, you have to send out your own invoices, you are responsible for your own taxes, you are responsible for and your own pension. So that is something that we're going to talk about later. But in terms of your finances, there is a move from other people doing things for you, I suppose would be one way of looking at it, to you having to do it for yourself. Now, when you go freelancer, you might have this limited company sole trader conundrum. The general rule of thumb is that if you're earning more than £60,000 a year, then it would make sense to start a limited company from a tax perspective. There are other reasons that you might want to start a limited company, or but the key thing to know is if you are going to start a limited company, you are creating another entity for which you are responsible. So you will then have a tax return for that limited company and a tax return for yourself as a sole trader, your self-assessment as well. And that comes in January, which we'll circle back to in a second. But the second point that I want to get onto now is how to get your finances in order. And I know that's so hard for many people who don't have time or inclinations to write out Excel spreadsheets. I happen to be a complete fan of Excel, but not many people are. So what I'm going to show you now is an Excel spreadsheet that might help you understand the importance of tracking this in and out journey of your money, because when you get it down on paper, what is going out and what is coming in, as scary as that is, it's just super useful to be able to track the date it's coming, the date that it's happening, whether it's coming in and out, what it is, how much it is, and how much that then affects your cash flow. Because only once you've done that bit of maths, can you work out if you can squirrel away some every month. Because it's that little bit of difference and change that can potentially impact on delivering those future goals. So what I then want to do, once you know that a small amount of money, I want to come on to how you're going to utilize that information going forward to deliver on your goals. Well, one of the key things that I advise my clients to do is have a current account into which your money comes when you've sent out invoices. Hopefully, as David was saying earlier, regularly get payments in, and you have your current account. You then have what you might refer to as a savings account, but I want you from now on to refer to as a rainy day account. And the reason for this is because so often we put money aside for what we call savings, but then get spent on tax or holidays or boilers or emergencies. So let's call it what it is. Let's call it a rainy day account. The third account is a tax account. So if you're thinking about sending out invoices as a freelancer, 20% of that at least, depending on your levels, but at least 20% of that should be squirreled straight away into a tax account. And that way, when January comes around, which is when everybody has to pay their personal self-assessment at the end of January, you have the money there waiting in your tax account. Now, the fourth account is where we get into this delivery of our life plan. It's a savings account, and how that money is saved is so super important, because you want to be able to track it, you want to be able to understand its potential and its potential for growth. And part of that is going to be a pension, so I'll come on to that in a second. Now, really importantly, when you are employed, there are some areas of your life that are looked after by an employer. Possibly they might give you private medical care, possibly. They might pay you sick pay, possibly. They might give you a death in service, which is often a multiple of your salary. Now, if those bad things happen, then the employer has set these things around you so that you are somewhat protected. And if you're thinking of moving into the freelance area, or if you're already in the freelance area and haven't thought about the what-ifs of life, don't worry. There are some simple things to put into place. Private medical cover, super easy to put into place. Not necessarily that cheap, but super easy. Now, income protection is basically sick pay that will kick in at a certain point, pre-designed, as it were. So with my clients, for example, I work out what their if they've got any what's the word I'm looking for, any protection in place already, that, or any well, I suppose an emergency account there, and how long that would last them for before they run out of money. And the income protection will kick in and then last until retirement, potentially, if you can't work. So if a doctor says no, they can't work, then that income protection will kick in. And then life insurance as well. If you've lost that death in service cover, you might need to think about getting extra life insurance. Now, all of these things come with a monthly cost, so a monthly premium, as we call it, and they're all utterly essential, but you must balance that cost into your head if you're thinking about becoming freelance. Now, very quickly, with my last few minutes, I want to get you to think ahead, which I did with the life plan at the beginning, but you've got to project yourself ahead. You've got to think about the person that you're going to become. You've got to know that that person is going to have needs that possibly can't be met by a regular income. So therefore, we have to start thinking about a pension. Now, think of it like this. Think about where you might be in this life journey. Again, apologies for the DIY element, but you get the picture. The first bit, you're learning it. The middle bit, you're earning it. the last bit, you're spending it. It's not always that black and white. Many people in the creative industries have no intention of ever retiring, but there may come a point that you want to be a bit more flexible and have an income that you've saved in your earning it years. And it's really important to know that most people will run out of money 10 years before they die, even when they're preparing it, even when they're planning for it. There is also a pension crisis in this country, which is really important to know. The government isn't entirely sure how they're going to fund anybody's pension, state pensions. At the moment, everybody's in line for a state pension if you've paid your national insurance contributions. But who's to say in 20, 30 years' time that those pension contributions might not be, what's the word? It's just gone out of my head, the word. But anyway, it might be that if you've got any other assets, the government won't pay your state pension. It's not, no government has ever said this, but it's just that at the moment, even the state pension is only £9,000 a year, just over, so a full state pension. So it's really important to engage with this. Another really important reason to engage with a pension is that it makes phenomenal tax planning. Because if, for example, you wanted £100 in your pension, the way that it works is you put in 80 and you'll get another 20 given topped up by HMRC, and there's no investment in the world that will match that. So you today can go out and get yourself a pension if you're freelance or you're thinking about coming freelance, and you can consolidate your past pensions, and that's what I spend a lot of my time doing, is consolidating people's pensions so that you know what your pot is, and you can start working out whether that pot is going to deliver on that future goal that we've been talking about. So this is the future goal. This is the life plan. Go back to the life plan. Think about the fact that you've got this, these calls on your time in your future, and see if you can engage with that future person and start putting in place some of these pointers so that your finances can get in order today and get delivered on tomorrow and in the longer term. Now, I'm not sure whether we've got any time for questions, but that is me wrapped up. As I said, I will be hanging out in the welcome room. One final point is that I have put, yes, it's up on the second screen. How to Think Like an Economist podcast is a really useful podcast to help you make decisions in your life, and it's a real eye-opener. So I really highly recommend you going to listen to How to Think Like an Economist.